What is happening, ladies and gentlemen? It's your boy, Sean McLaughlin, Options Sean on Twitter. Today is August 31st, 2023. It's the end of the month. Summer, the unofficial end of summer is this weekend. Football is in the air. Boy, what a summer it's been, at least for me personally. Wow, wild ride. I'm happy for fall to start. But hey, this is the Options Jam session. This is a session where we review trades that we have on in the All Star Options service, trades that we've exited in the past week, trades we've adjusted in the past week. We're going to review some updated stop loss levels today in some of our existing positions, and we'll touch upon new trades that we've also gotten into over the past week. But before we get into all that, of course, we have to drop the old disclaimer. Everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. So first up, I like to start these sessions with just a broad overview of where we're at least in terms of the S&P 500. As you can see, we have been in a bit of a correction. We've had a nice bounce back this week. In fact, this chart is a little out of date. It needs to be, well, this is a weekly chart, right? So it doesn't have this week's candle in just yet. That's why. But we have bounced back pretty significantly. Does that mean that the bull market is back? I don't know. We are of the mind here at All Star Charts that we are in for some more sideways consolidation in terms of the broader market. Certainly, there can be some stocks that continue breaking out or have fresh breakouts higher. But generally speaking, as far as the index level is concerned, we kind of think that the next 4 to 6 weeks, we'll continue to see some sideways action, and we've certainly positioned that way with that in mind. Here's a quick look at the volatility index, VIX, basically selling back down towards the low end of the range. Everything's cooling off. It's the end of the summer again. Not much going on. We're kind of nearly over with earnings season. So a lot of the fear is coming out of the market, which is fine. It's neither good nor bad. It's just something that we observe. And it's reflecting the fact that options prices are getting pretty compressed across the board. All right, so let's get into some charts here. Now, the first two charts I'm going to show are positions that we exited this week. Stocks that tripped our stop loss level. First up being Boeing. We got out of this trade on Friday last week. This was a bull call spread that we got into on August 4th. And as you could see, the stock, we thought we were buying a little pullback here, and it was looking real good for us. But as you can see, the market had other ideas, and it closed below our stop loss level. Did we get whipsawed? Who knows? I would rather wait for this thing to reset before I get back in. But either way, we got out. I protected my capital there. What did I exit this trade at? I got out at 11. No, that's not right. Where is it? These were November. Yeah, here it is. We paid $660 for it, and we got out at $310. So, not a total loss, which is great. We'll take it. Our position was always sized in a way that if we were to lose 100% on a debit spread, that 100% only represents no more than 1% of my capital, 2% in some cases. But either way, not a big loss. We could take it. Moving on. Next trade that we exited this week is actually, I got out this morning, this Verra Mobility, VRRM. This was a trade we got into on June 28th. We had, we had the December 20 calls. We paid 90 cents for them back on June 28th. I moved my stop up, which we're going to talk about on some of these other stocks coming up pretty soon, but I moved my stop up to 18 following the bounce off of this low here. But unfortunately, we closed below 18 yesterday. And so I got out of the options today. I got out of them for 45 cents. So again, much like that Boeing trade, we only lost half of what we put up. So not bad. But we are out of Verra Mobility, VRRM. All right. So now for the next series of charts here, these are charts where I've updated our stop loss levels. I'm trying to be a little bit more aggressive in moving up my stops. going in to the rest of the year here. And I feel like the correction that we just had and the floor that we put in helped me set up some good key levels to key off of in a lot of positions that we are currently long. Now, I apologize. We kind of had to hurry to get all these charts ready for the show today. So me and my analysts, we were not able to put the trades that we have on these charts. But in IonQ, for example, we are long a January 10-20 call spread that we paid $1.85 on. This trade is working for us. It's looking good. We have a resting order to get out at $6, and we're getting close. But I've moved my stop loss level up to $12. You can see it here. It's just below the low of the last few weeks. If we break below 12, that's my signal to pull the plug on this trade. But we're looking pretty good here. I think we're going to get hit. Our profit target is going to get hit here pretty soon. Okay, next up is Chevron. Now this is a trade. This is a trade we've been in for a long time. We got into this trade. We bought these calls as leaps back on February 2nd of 2022. So not this past February, but the February before. All right. We bought leaps, and we were able to sell half of our leaps. This Fonzie screwed up. We did get out on March 2nd, but it was actually March 2nd of this year over here, 22. He's got the wrong year, but we got out during this run up. We sold half of our position, took all of our original risk capital out of the trade, and we've been free riding ever since, which felt pretty good when we had this big sell-off here. Oops, let me go back. We had this big sell-off here and here, but we are still in our position. We're sitting in profits right now. Whatever we sell these calls for will represent profits. We have until January still. We're in the what are we in? We're in the 150 calls. Yeah, so we're in the 150 calls, and that happens to be where our new stop loss level is. 150 corresponds with this support level here. That's been a support level all year. As long as Chevron can stay above 150, we're going to stay with this trade. And like I said, whatever we exit these calls for will be pure profit because we already took our original risk capital out of the trade during this run up last March. But this is a trade we've been in for a long time. I've almost forgotten about it, but it's still on the books and it's still working for us. Okay, next up, Carrier Global, ticker CARR. We got into this on July 10th. We are in December 55 calls. We paid this trade's a good story here. We paid $2 for these calls back on July 10th. On July 28th, up here, after a great run, we sold half of our position, which was according to our plan. Okay, we sold half of our position, but we didn't just take our original risk capital out of trade. We took a lot more. We sold those calls, half of those calls for $6.70. Remember, we paid $2 right here. We sold half of our calls for $6.70. So we've locked in a profit. The rest of these calls can expire worthless, and we're still walking away a profit. So we're guaranteed winner here. That's the good news. There's still good news. But we moved our stop loss level up to 50 now. So right in here, which is basically where we broke out from. As long as Carrier stays above 50, we're going to keep riding these calls as far as they will go. We have until December. So that's where we're at in Carrier. And in the future weeks, if we break this high, then I'll likely move my stop up even further to just below here, maybe about $53 per share. But right now, we're at 50. Okay, Google is interesting. We put a new trade on in Google just yesterday, but we have an old trade on in Google that we've been in for a while that we got into on May 3rd. And on the May 3rd trade, we bought December 120 calls. Soon after we got into this, right in here, about a little more than a week later, we were able to sell half of our calls, again, according to our plan. We sold half of our calls at a double. So this is another position that we are free riding, and whatever we sell these remaining calls for will represent our profit in this trade. We are long, like I said, the December 120 calls, so we're looking pretty good right now, and we think Google's really going to break out here even further. So We're looking good, but I've moved my stop on this piece. Now remember, there's a separate Google trade on that we put on this week, which is up on the blog. You guys can get all the details there. But for this particular trade, the stop loss level is 115. Any close below 115, which corresponds to this level here, that will get us out of our, let's call it trade number 1 in Google. All right. And lastly, I think this is the last chart we're updating our stops on, is Caterpillar. Caterpillar, we're long the 240 calls in November. This is the same story. We got into this trade on May 17th, right here. We sold half on June 7th. Another free ride. I love these free rides, which, by the way, these free rides have made me sleep a lot easier during this market correction that we've been in. I mean, you never like to give back open profits, but I'd much rather give back open profits than eat into my capital. And so that's been a good thing. This best practice has been made it a little bit easier for me. But we've been free riding the rest of the way. And now I've moved up my stop loss on CAT up to 210. Wait, is that right? I think, you know what? I screwed up here. This chart is wrong. Our stop loss is going to be right up here at 250. All right, so our 250 is the stop loss I do. This is my bad. I screwed this up. Fonzie did the right thing, but I screwed up. The stop is 250. I'm writing a note right now to put this in my charts and update my stop. But I want to make sure that it's everything's correct. But 250 is the level we're watching now for CAT. As long as we hold on to 250, we are good to go. Yeah, okay. And whatever, like I said, whatever we get out will be our profit. Oh, and then here's Honda Motor Corp. Same story. Got in on May 15th, sold half on May 30th at a double. We're free riding on this one, but now we've moved our stop up to 29. As long as we can stay above 29 in Honda Motor Corp, I'm going to stick with this trade. And we are long, where are we here? We are long the October 30 calls. So this one has a little bit, this one will be, has a little less time to expiration. We have until October. But I like our situation here. I like our odds. I like this consolidation. If we can get another breakout here, that would be great. But no matter how you slice it, we can't get hurt. We're free riding. We're long the October 30 calls. So let's see what comes in Honda Motor Corp. And KB Homes. Boy, I actually updated a lot of stops. I forget how many I had. A lot of charts today. KB Homes. I'm a broken record. We got into this on March 29th. We sold half on May 29th, exactly 2 months later. So we are free riding again. All right. And we've now moved our stop up to 42. So as long as we stay above 42, we're going to stick with this trade for now. Let's see, what are we? We are along the October 50 calls. So right now they're just slightly in the money, which is fine. We have until October. In fact, next week, I imagine when we talk, I'm going to move my stop up to 46. I think that makes more sense now since we're getting closer to expiration. But right now we're at 42. But if you want to be more aggressive than me, if you're riding this position like us, 46 is probably the level that we don't want to see break. All right. Now that we got all that out of the way. And by the way, all this is good news, right? I mean, you guys saw a common theme here. Our best practices have us into a bunch of trades that we're free riding on. We have no open risk other than profits. I'll risk profits all day long in service of trying to find even bigger wins. That's a superpower that allows me to hold on for some big wins. And the big wins are what make our year, right? At the end of a year, at any one year, if you go back and look at all of our trades, all of my trades, all of your trades, everyone's trades, if you're exercising proper risk management and not taking any large losses, then what's going to happen over the course of, let's say, 100 trades or 1,000 trades? 90% of those trades are going to be a net wash. Most likely, you're going to have a bunch of small winners, a bunch of small losers. They're all going to add up to a whole bunch of nothing, right? A whole lot of effort for nothing to show for. But those last 5 to 10% of your trades, if you were letting them run, letting them turn into big winners, they're going to be the big winners, and they're going to make all of your profits. That's where all of your profits will be found for the year. Will be found in those handful of trades, that 5 to 10% of your trades, as long as you don't suffer the large losses. Large losses are what ruin the math. Okay, we got to do everything we can to avoid the large losses. All right. So anyway, the new trades we put on this week. If you want the details on the particulars of these trades, head to our blog, head to the options area on allstarcharts.com. These are trades we put out for our members, for All Star Options members. If you're not a member and you want to get access to detailed trading plans for all of these trades, shoot us an email, info@allstarcharts, and we'll hook you up. But the trades that we got into now, if you want to go find the details, we're in Lowe's, we're in Snowflake, and we added a new trade in Google. You can find the details on Google on our YouTube channel, on Stock Market Media. JC and I did a video about this yesterday. Get all the details there. But those are the latest trades. So if you haven't gotten the details on those yet, please head to the blog and find them. Or you can find them in the All-Star Options Telegram chat for members. All right, everybody. That's all I got for you. That was a lot today. We had a lot to talk about. Any questions at all? Shoot us an email, info@allstarcharts.com, or Sean@allstarcharts.com. That'll get to me as well. Have a great rest of your week. Enjoy the last throes of unofficial summer, Labor Day weekend. Get after it. Have some fun. Enjoy the opening of college football season this weekend. I know I will be. And we'll talk again next week. Take care, everybody.